This is Rick Rule for Rule Investment Media with the ongoing series of CEO interviews for the Natural Resources Investment Symposium in Boca Raton, Florida. I'm delighted today to introduce you to a longtime friend of mine, Richard Clark, who I'm embarrassed to say I've known and done business with for almost 3 decades. By the way, all of it profitably. Richard, first of all, thank you for your sponsorship of the conference, and thank you for the many successes that you and previously you and the Lundin team have delivered for our clients, listeners, and subscribers over the years. Welcome.
Thank you, Rick. My pleasure to be here. Thanks for the invite.
I need to disclose, that I'm a shareholder in this company and every company that's been invited to our Natural Resources Investment Symposium. So if it appears that I'm talking my book, understand, in fact, that I am. Richard, let's begin by the track record of your team, that part of the track record which is appropriate to the task at hand, which is to say the discovery, development, and sale of major gold projects in Africa. What have you done in this area, and why should people care what you have to say about this project?
Well, Rick, as you know, this started almost 25 years ago when I first joined the Lundin Group. And I was hired into the group by the illustrious Mr. Adolf Lundin, who you knew well, and was a major mentor of mine. And I came on to basically help Adolf redirect some of the investments that he'd made in companies that the Lundin Group then controlled. And we made the decision that Africa and gold would be a good place to go. And rather than do what so many of us in our business do, and that is look at grassroots exploration and let's see how lucky we can get, we decided to short circuit the luck and go after existing deposits that we thought, with our expertise and our financial ability, would allow us to build significant companies. And so that's what we did. We took a shell effectively, and we created a company with that, and joined with an Australian company called Redback Mining. We merged the two, and we ended up being in control, which is the typical modus operandi of the Lundin Group, always be the biggest private shareholder. And we then proceeded to commence development of that project in Ghana. And it was the first mine developed in Ghana in about 11 years, called Chirano. And it was a big success in a very difficult market. Mind you, we're all familiar with difficult markets. It seems that that seems to be the base case of our careers, and we occasionally get these highs, and hopefully you can capitalize when the market's at a high. But we did it the very hard way, slow, methodical. Our key objective was to develop mines, get cash flow, continue to build the company, concentrate on brownfields exploration. So with the success of putting Chirano into production, we started exploration in and around the mine, and we were very successful in discovering a high-grade zone on the project, which transformed the company. That took us into a new realm. Originally, we were going to be producing about 125,000 ounces. With that new discovery, we were able to produce about 250,000 ounces of gold, and that allowed us to go and look for other things to do. There's a bit, a long story between Chirano and our next success, Tasiast, but I'll keep things brief and just focus on Tasiast. Following Chirano, we went into the country of Mauritania, which really very few people even knew where that was. Again, we saw the opportunity to continue and complete the development of a project that was being done by another company called Rio Narcia. In conjunction, and one of the things that makes us unique, was we were able to affect that deal in partnership with Lundin Mining. Rio Narcia had base metal assets plus gold. They were not prepared to divide them. And so combining with Lundin Mining, we were able to do a transaction where Redback Mining ended up with the gold asset and Lundin Mining ended up with the base metal assets. So it worked extremely well being part of a large international group in order to affect that deal. Again, we were very successful. It was a modest mine. We put it into production. It's going to produce about 150,000 ounces a year. And then we made probably one of the biggest discoveries in Africa of the decade. And it turned a couple of million ounce mine into a 10 million ounce mine. Very subsequent to that, at the high point, Redback was producing about 500,000 ounces of gold a year. And based on that and the exploration upside, we were able to sell that project to Kinross Gold for $7.2 billion US. Now, when we started Redback, it had a modest market cap of $50 million Canadian. And that was about an 8-9 year journey. We look at our investments on around a 10-year type of perspective, and we've been pretty accurate on that. Following the success of Redback, we went on, Lucas Lundin and I created a private company to go into Northeast Africa. We ended up discovering a project in Sudan. Unfortunately, many people know Sudan's having difficulties right now. And we all pray that that's going to sort itself out, and I believe it will. It's not the first difficulties that have faced Sudan. However, Sudan's prospectivity for our industry is spectacular, and in a very short order, we discovered another world-class deposit in Sudan, proceeded to take that to feasibility, and on the basis of that, we sold the project a year or so ago to Perseus Mining of Australia for about $250 million. Certainly wasn't a Redback transaction, but you have to take into account the jurisdiction, the politics, the market, gold price, everything. It's not, we don't pretend to be geniuses. A whole bunch of stars have to align in order to get, a sort of a 10-bagger type transaction. So one of the things we did in order to facilitate that deal in Sudan, though, and to maximize value for our shareholders, we effectively flipped out of the transaction assets that we had in the company located in the country of Côte d'Ivoire. So before the transaction with Perseus, we spun those out into a vehicle, which is Montage. And we then were able to close the deal with Perseus just based on the Sudanese assets. The shareholders of Orca got the benefit of Montage and that exposure. And it's interesting to note that, we were the first, that those properties are not new. They were acquired by Redback as brand new, never before acquired projects back in about 2008, 2009. We did the initial work on it. We tried to spin them out of the Kinross deal and were told absolutely not, given the price they were paying. And then we negotiated with them for many years and finally were able to acquire those into Orca. And as I said, spun them out into Montage, where we are now. So effectively, Rick, what my group within the Lundin Group has done is created 3 huge opportunities in Africa, backed by the Lundin Group and other key investors like yourself. And that is Redback, Orca, now Montage.
Tell us something about the Coney asset in Côte d'Ivoire and why your group, which has had a lot of success in Africa, believes they're on the sort of 3rd or 4th leg of their journey.
Well, when I was running Redback, I went to the exploration team and said, look, where would we go in West Africa to find something brand new? And they did a regional analysis and came up with a very, very interesting confluence of major structures where numerous mines were already located. And there was a crossing of those structures. It just so happens right where the Coney deposit was discovered. And we basically acquired that ground based on a geological interpretation by Hugh Stewart, who's been with me for most of that 20 odd years, and was critical and if not the discoverer of most of the ounces that my group has seen and been successful with. Hugh located that ground, loved the ground. He was very frustrated when we lost it to Kinross, very happy to get it back. We weren't in there very, very long before we made a discovery. And very quickly, once we got back control of that project, Coney proved our geological model up, and we ended up discovering a significant deposit, which sits at the moment at about 3.5 million ounces.
Significant indeed. No, significant indeed. Important for the people listening to this interview. This 3.5 million ounces is, I think, reasonably called a starter kit. With 195 million shares outstanding at about 50 US cents a share. Market capitalization here is below $100 million on a per ounce basis, given that prospectivity, I have to say that I feel pretty good about my conflicts of interest. What I'd like you to do is tell me about who owns half the company. I'm interested in the fact that about 50 million of the 100 million market capitalization is fairly closely held, which means that in the event of good news, you don't have to move 100 million market cap. You only have to move 50 million of that. So tell us who owns stock and why that's important.
Okay, let me tell you as much as I possibly can without breaching any confidences. But as you know, this was a company that was created by the Lundin Group. So, the Lundins are the largest non-commercial shareholder, in the sense that we have Perseus is the largest shareholder as a result of acquiring Orca, and they sit at about 17%. The Lundins are around 10, and then as a result of doing a corporate deal last year with Barrick and Endeavour, both Barrick and Endeavour are on our shareholder list as well. Very quickly on that, what we were looking to do, our project Coney is significant, but what we've been trying to do is add grade to it. Okay, so Coney is about just under a gram. It's incredibly economic, and if I was still running Redback, I'd build Coney all by itself. But the market today is sensitive on grade. We all know it's a tough market to raise money in. So we saw an opportunity to negotiate with Barrick and Endeavour, who had made a discovery to the north of us, about 25 kilometers, of about 350,000 ounces of plus 2 grams that we felt we could truck to our project. And that it took us a couple of years to get that deal done. It's never easy dealing with Barrick. And we got it done, and we have since been drilling like crazy. We will come out with a indicated resource very shortly, and I can tell you that that deposit, which is called Bongogo, has met all our expectations and more. Plus, we've made a number of other discoveries. So that is, that's the significance of that and how we got the shareholders. In terms of how we have financed Montage, it's effectively been a private club, as you've noted. We've been very difficult with the typical markets on Bay Street or in Vancouver or, quite frankly, London. And rather than dilute shareholders to hell, we believed in this asset and this story so much that we've put our own money into it significantly. So the Lundin Group and friends of the Lundin Group, let's put it that way, and you would know all of them, have been the significant financiers of Montage and continue to be today. I mean, you would have seen, I'm going to foreshadow you a bit, Rick. We just did an $18 million financing. Canaccord led it. But I can tell you that, pretty much all of that came through us. We split it into this new life transaction, and 10 million went to the public market and institutions. It's the first institutional offering that we have done, and it was very well received. And the balance of the $8 million was us.
I guess the near-term unanswered question is this resource estimate that's coming out. When might we expect to see that?
The resource estimate on the deposit we call Bongogo will be out in the next couple of months. We will incorporate that into a revised feasibility study for the whole entire project, which will be released before the end of the year.
Okay, so we have really two de-risking events. One is this high-grade resource estimate, but that's going to be contained in a greater. Is it a full feasibility study?
It is what we've done, Rick, is we've drilled it off to indicated, and therefore we'll be able to incorporate those numbers into an amended study of the entire project. And the higher grade at Bongogo will get blended into a larger project,
sure,
but we will put out the indicated resource as it is.
Got it. Finally, Richard, this is meant to be an overview. Obviously, we could talk about the project for 45 minutes, but we don't have 45 minutes. Tell our viewers where, in addition to the Natural Resources Investment Symposium, they can find out more about the project, and tell them, give them contacts for people at the company who are willing to entertain questions from potential shareholders.
Sure. Our VP Corporate Development is Adam Spencer. You can get his contact details on the website. I highly recommend that your listeners go to the website, which is montagegoldcorp.com. Pretty simple. And all the numbers and contact details you'll need are there. We are always available. I think it's important to remember the majority of our team are the same guys that created Redback and discovered all those ounces and actually put them in production. And we're the same corporate guys that sold the companies and realized all those values. So that is our intention, is to do that again. All I can say is stay tuned. We have a lot of things going on. As we pointed out, it's a very, very tough market. The advantage that we have is we have a project that I think that any mid-size or larger mining company would like to have. And this is going to be a reality. It's just a question of how we're going to put it forward.
Richard, from the point of view of our listeners, a tough market is a good market, which is to say they get value for money. I look forward to introducing your story to the Rural Investment Media audience, both virtually like this and also at the Natural Resources Investment Symposium. I want to thank you once again for decades of effort on behalf of my audience and of course myself. And thank you once again for agreeing to this interview and your support of our educational efforts.
Oh, my pleasure. And I look forward to being down with you in Boca Raton.
Thank you.